Hey everybody, this is Debt Free Joel. I just wanted to reach out to you guys and hopefully give you guys a few gems as it pertains to investing, the things that you should be thinking about. Um, Not only do I live a debt-free life, but I've also dedicated a considerable amount of time to learning about investing. So to give you guys a background before I start, I have an applied mathematics and statistics degree from Stony Brook University. I also have an MBA in finance from St. John's University, and I also have the CFA designation, CFA standing for Chartered Financial Analyst Designation. In my opinion, that's the closest thing you can get to a doctorate in a practical sense. So roughly what that means is for the last 10 years, I've been studying everything from investing, finance, corporate finance, economics, financial reporting, you name it. So there's a few items I just wanted to, reach out to you guys about, let you guys think about. I know this is a huge thing now for everyone that wants to invest. So hopefully you find these gems pretty good. All right. So rule number one, don't ever invest your savings. So what do I mean by that? What I mean is you don't want to necessarily dip into your savings to start investing your money, right? We're still in a recession and unemployment is still above 10%. In the black and minority community, it's actually higher than 10%. So don't believe the hype when you hear it on the news. Make sure that you're well protected. There still could be economic downturns. The other thing to consider as well is the stock market is not an indication of the economy. Right? I'm going to say it again. The stock market is not an indication of the economy. So make sure you're well protected. Make sure you have a full savings ready to go. If the market starts to go bad, if the economy starts to go down, you want to be able to withstand the hit. If you lose your job, you don't want to invest money that you need tomorrow. So if there's any gem from the first one, is this: do not invest your savings and do not invest money that you will need immediately tomorrow. So number two, what's prevalent in the black community, especially with Hispanics right now, as well is the use of options. I'm not sure where this came from. Options have been used for at least a few decades now, explicitly. And if you look at the concept of options, the ability to purchase something later on at a specified contract or sell something at a specified contract, that's been used, for hundreds of years. You can go back, a while now and actually take a look, especially overseas. So there's a few things to consider about options. Number one, they're not necessarily riskless. They're as risky as regular stocks. In fact, options are mostly used by institutional investors and advisors as a way to hedge risk. What most folks are doing who are watching this video right now is that you're speculating on the price going up or down. Which is fine, but I think you should know the vehicle that you're using is not something that's special. It's not something that's guaranteed. In fact, the majority of people who are now using options are using call options, which is betting on things going up. So if the stock market keeps going up, you keep making money. That's not how necessarily everything works. So, do your homework on options, but I just wanted to put that out there. Options are a good tool for investing, but they're not the absolute tool. There's nothing that says that they're better than anything else. And they carry the same amount of risk of losing money just like everything else. All right, number three. So there's a lot of people on social media right now that are going to tell you how to invest in stocks, especially in options, right? You can look on Instagram, Facebook, Twitter, doesn't make a difference, right? Everybody and their mother is going to be an expert at this point. And some of them have the nerve to charge you on how to do this, right? Or how to learn about it. Here's my advice. I'm not going to knock someone for trying to make money. And I'm not going to try to knock someone who's going to give you free information on how to invest. What I am going to say is trust but verify. The majority of these people who are on here have no idea what the hell they're doing. Okay? So don't judge someone by the number of followers they have. Don't believe them if they tell you what their net worth is. Have them prove it. Now I know what you're thinking. Who the hell is going to actually prove that they're able to do certain things in the stock market because they want to keep it close to the chest? That's my point. The point is that people lie, okay? People exaggerate, especially because of money, because money is more about emotions than it is about mathematics. So before you believe somebody on social media, make sure they actually prove to you how they achieved their returns. Chances are these people are making more money from teaching you the classes than from actually investing in the stock market. Believe people who show you the charts. Believe people who show you their returns. Believe people who show you where they failed. If someone doesn't ever show you where they failed in the stock market, don't believe them, because everybody catches a loss. Just because the market is going up every day doesn't mean that they're good. All right. So don't believe the hype every 2 seconds. Stick to your guns, trust, but verify. Number 4, one of the things that you want to do with investing is make it a study, right? Anything that's worth something in life, you have to put the work in. And I'm not just talking about a few YouTube videos here and there, right? You have to really put the time and effort in. One of the things that I like to do, obviously, is read. And one of the books that I've always recommended to anyone who wanted to get into investing is this right here, A Random Walk Down Wall Street. It's one of the best books that I've read as it pertains to investing. It has everything in there. It talks about various concepts. It talks about options and futures. It talks about regular stock investing. It gives you the history of investing. It really puts into perspective what you need to know. So I would strongly recommend you guys getting that. The YouTube videos are fine, but I think you should put more effort in. And something else to consider, read the paper every day, not just the finance section. All the sections are pertinent to your investor knowledge, because investors not only look at companies, but also how geographically things are moving. So think about overseas, for example. All right, so make investing a study. Pick up this book right here, A Random Walk Down Wall Street. I'm sure you'll be happy about picking that up. And number 5, and everybody hates when I say this, but I'm gonna keep saying it because it's the absolute truth and you need to know this. Long-term passive investing normally and overwhelmingly beats short-term active investing, right, over the long term. So what do I mean by that? So for the majority of you who are trading options, who are trading stocks all day long, it feels good, you're making money. But for you to sustain that over the next 1, 3, 5, 10 years is almost going to be impossible. If I were to take your returns and I were to compare it to the stock market over the next 10 years, what you would see the majority of the time is that the stock market would beat you. And they have a lot of instruments out there, mutual funds and ETFs, that just track the market. So an investor like myself could just buy a mutual fund that tracks the market while you're sitting there trading all day long. In 10 years, if I were to compare our bank accounts, if we start at the same amount, I would probably have more. And that's statistically most of the time. So here's my advice. I am not going to tell you not to trade, because I don't want people sitting here cursing me out. But I will tell you this, the majority of your portfolio should be in a passive invested either mutual fund or mutual funds, right, to get proper diversification. So maybe 80% of your money should be just in mutual funds that track the market. Take another 20% and have at it. Day trade, options, do what you want. But don't risk the entire portfolio, right? You're not trying to get rich overnight. If you are, good luck, that's gambling. But if you're trying to invest over the long term to build wealth, what you'll realize is your core portfolio should be fixed on indexing, which is what it's called. And then, another 10, 20%, you can just figure out what you want to do, invest in individual securities, options, whatever you want, okay? So I hope you guys liked the video. Feel free to follow Debt Free Joel. Obviously, I live, like I said, a debt-free lifestyle, but there's some things that I also have a good amount of knowledge for. If you have any questions, put the comments below, and I'll see you guys later.